Happy Friday, Eric Bible with the Bible team at Neil Home Loans. Fed week, jobs week, always anxiety walking into weeks such as this, but that anxiety was ultimately put to rest. And as we start the morning, 30-year fix is pulled back to 7.37, down from last week's 7.52. And it's centered around some real significant changes in Fed stance, as well as some of the data that has percolated through the week. Definitely want to cover on that today, but also I want to close with the buy before you sell. We continue to get a ton of questions around how we can put these products to work for you and your clients. So I want to take a brief 30 seconds at the conclusion of this video to just remind what those products are all about. So let's first jump into the data of the week. We know that the Fed met. We also know that we received the BLS jobs report this morning. So first, the Fed. We know rates were left unchanged. No surprise there. It's crazy to think that the last hike was in July of 23, and here we've been hanging out at these levels since then. If you're like me, you were secretly hoping and waiting for the first cut, but we didn't get it. But we did get some very important comments from Jerome Powell, and he was pressed on the matter of what would it take for a hike to happen? Meaning, we know inflation has not been doing the things that we want. Up until today, unemployment was still showing signs of strength. And he responded with, we believe that we're at the top of our range, meaning we don't expect any additional hikes, and the next move would likely be a rate cut. Now, asked when, obviously he said time will tell, data dependent. So really some interesting things and some key components to take away from that. Ultimately, the markets liked and responded well to. So that really kind of started the rally, pulled rates from last week's high, followed by some additional relief that will be forthcoming with some of the balance sheet components of the Federal Reserve. Looks like they're going to be reinvesting some of the funds that naturally mature or fall off their balance sheet into treasuries. And not to bore you with the details, but really that will provide some ample liquidity buying power to other investors to ultimately purchase items like mortgage-backed securities, which will naturally improve mortgage interest rates. That will start in June. The other big piece was centered around the BLS jobs report that was released this morning. We know jobs have been very robust as of really the last year. And walking into this report, it was expected to be kind of a moot point. Unemployment was to remain at 3.8, 245,000 new jobs created. Well, we got a little bit of a surprise. Unemployment moved up to 3.9, and new jobs created in the month of April were 175,000, which really expanded the rally that started earlier this week on the back of the Fed's comments. And as we open market today, mortgage rates are continuing to show signs of improvement. Now, that takes time to ultimately work through rate sheets and what have you. But for a Friday, an anxious week like this week, hey, we'll take the wins, we'll run with it. And here it's definitely something that I know the Fed is watching, is unemployment continuing to move up, as mentioning in his comments this week, where yes, no rate hike is expected, no timeline around the first rate cut, but seeing the movement within the job sector, the strength being called into question, if we continue to see unemployment rise month over month, it would warrant Fed intervention, which would likely result in a Fed rate cut. So definitely more to come on that, something we're going to continue to monitor and provide feedback as it occurs in live time. With that said, I ultimately want to close with, again, the buy before you sell program. We know there's a tremendous amount of clients that have been kind of held in their homes. They want to move, but the main fear outside interest rates is, I don't have a replacement property and I have to sell in order to buy. And we all know the narrative. Getting a contingent offer accepted, especially in this market, is a tremendous undertaking, massive challenge. So with that said, we do have significant products that allow your clients to do just that, buy before they sell. It's not a bridge, and it's significantly less expensive than what a traditional bridge would cost. If you are running into clients, situations that fit this question, quandary, whatever you want to call it, we want to speak to you. There are options out there to help move and create action, and that is what this is all about. Those who continue to move, provide value, are the ones that command the highest amount of opportunity. As always, make it a fantastic Friday and a greater weekend. Thank you.